Midweek stock market update, friends, and here we go right into the heart of it. And oh my God, what an incredible year it has been. I hope your pension's up 50% because the market is. Let's dive into that. Price to forward earnings. Yes, the share prices marked in red look expensive. But then again, a valuation measure based purely on share price to projected profitability is not the only thing that moves stock prices. If it were, then the markets wouldn't be so high. It's not even the only measure of valuation. What about energy? That looks relatively cheap, so do banks. And we'll come to that later and some of these others which I've marked in green. Remember, with all of this, I will not just be looking at the various price charts. I will looking, as I do on my approved filtered list, I'll be looking at valuation, growth, income, using my proprietary algorithm to score based on that, cash return on capital invested, momentum, Sortino, and alpha, and a host of other things across 10,000 securities. So let's get into some of those right now, shall we? Over the past week, it has been phenomenal. Lots of green. Okay, many people having missed the boat this year. Let's hope they don't miss it in 2024. 1 month performance on ETFs. I've just done a video on these. It's on all my social media from LinkedIn to everything else. Have a look at alpeshpatel.com/links if you want to know where my TikTok, LinkedIn, Telegram, everything is, because this video is on there and my assessment of some of these ETFs and which ones might be interesting to look at. Given that you look at something like Brazil's up 3% in just a month, financials, KRE up 17% in just a month, or technology, SOXL, 29%, that's leverage, that's why. SOXX semiconductors, which isn't leverage, that's up 10% in a month. So what about going forward? What might look good? Have a look at my YouTube and Telegram, all my socials, including even Instagram. Markets year to date, we are up. We're going to close NASDAQ at about 50% up. If your pension isn't up that much, sack your financial advisor, because that's just the market. The market was up that much. You know, normally they'll say, well, how can I outperform the market? That's the market. Hey, if it's not up 20%, which is what the S&P was, sack your financial advisor. That's 500 stocks. That's 500 targets they could have hit. They probably didn't give you either of that. For those on my Great Investments program, who've been on since January and were more NASDAQ heavy, well, they've beaten that. Some have got 100%. Some have doubled their pension in a year. That's not typical. That is not usual. That is not normal. Those who are S&P heavy have got between 20 to 40%, which is what we generally target. Anyway, I target it. Is that aggressive? No, the market did it. I didn't do it. And the S&P 500 alone going up 20%. Okay, now these stocks, well, what were some of the big movers just over the past month? Of these, I think Etsy's the only one that I particularly liked. By the way, we don't do it on momentum alone, so don't be fooled by pure momentum. Okay, and there's a video on this which is going to go on my social media up hopefully tonight on that one. But keep an eye on and I'll evaluate those and why I don't actually like most of them. FTSE 350 just shows that actually even in America, even in Britain, you can get some with huge returns, and that's just in a month. But when I analysed these, there wasn't anything which really made me excited about those going forward. You can shoot for the stars and then just burn out next month. So I think the biggest concern with all of those is people holding on to the returns they've just had. How's the S&P doing? Well, we are most definitely out of that downward channel. There's no point even looking at it now. And we are just in that direction. This is very positive because it's the monthly MACD, the blue dotted line, moving upwards. The weekly also in the right direction. So any pullback we get, which surely must come, it looks like it'll come in January now. Okay, any pullback we get, as we've had in the past, will probably be short-lived before rising upwards. I was initially thinking it was going to fall back all the way here before going up. Well, we'll see what happens, because January 2 years ago was the start of a downward move, and January this past year has been the start of a very significant upward move. So we'll see if January is the turning point again. So don't get too excited, but this is all bullish for now. Okay. FTSE has started to form something of a base, but until the MACD moves above its signal line, which is that dotted moving average line there, you can't get too positive on it. So hold your horses before you get too carried away. Apple. Now, the Apple strategy is what we call, do we buy, hold, or sell? Well, I already own a ton, so I'm definitely holding. There's no question of selling. And if you put a gun to my head, I would buy. Why would I buy? Well, because the monthly MACD is not overbought. It's not in the top half. And the dotted blue line is moving above its own moving average, which is positive, and it's moving in that direction. If it was moving this, it'd be neutral. If it was moving this, it'd be negative. So that we will call the Apple strategy, which means gun to head, I would buy more today. Right, that's where Apple is, and that's what the analysts think, though they only think there's 1% upside if it gets to the average of what the analysts think. Obviously, some dimwit analysts think it should only be at 116, others think it's got a high of 250. Given that there's a 100% difference between those two numbers, you really would think that most analysts haven't got a bloody clue what they're talking about, which is the case. Alphabet, Apple strategy for the same reasons, although be warned, look how this has turned south. So do be careful, and this is turning south, and this is falling. So if anything with Alphabet, if you're risk averse, you'd wait. That's not to say it's going to fall, it's just that it's probably going to go sideways for a little bit, and hopefully it won't do this, but it'll be more likely to do this, okay? So that's your Alphabet. Microsoft, definitely Apple strategy, but just watch out for January. I'm just getting a bit worried whether January might end up like this. I don't think it will. But before people get too overly carried away, which is always the danger with the markets, okay, I just thought I'd better mention that. That's your Microsoft. Amazon, similar story. Apple strategy with that looks good, looks strong. Disney. Now, Disney was a special situation for us in the sense that it didn't meet my approved filtered list, all the criteria, but that's what we're looking for. And in the past, when it's gone from here to here, so that's the special situation I mentioned. It's not looking like now. This is high risk. I'd rather own Microsoft than this, even if all the banks do like it as a buy, but I'm just showing it to you as a high risk special situation. nVidia, you know what the nVidia strategy is. If it falls X% from the highs it's been, then you will sell Y%, and Y will depend on your risk appetite. So just be a bit careful. Now look how this can go down here and still the price hasn't fallen because this is still rising. And it might be that this just continues rising. My concern is that we get something like this happen. So just keep an eye on it. But for now, it continues being a hold. Okay, Tesla, as I've already mentioned, we'd exited when it fell over here because I needed less volatility, and it was a special situation anyway, and since we'd got in January, it had been doing incredibly well. So we'd taken the profits and got out of that already. Meta, nVidia strategy for exactly the same reasons. Just look back at what I said about nVidia and it's the same reasons there. Oh, and it's been a great return for my students for this one. Yes, we got in January and not at the bottom last November or October. But that return of what, 250 odd percent or 200%, that's really made some pensions glow and look amazing. ServiceNow turned out to be really good because it was going sideways for a while, and that's the danger of exiting too early, if any of you did, which I don't think you would have done because you would have watched this. And now it looks like it's going to soar, and I think I bought more of this. So Apple strategy for this as well. It's not one that you'd buy and hold forever because this can happen, and you don't want to ride it all the way down. You don't trade your investments. You're not trying to time the market. That's not timing. That's bloody holding on for 2 years. You know, anybody who calls that timing's an idiot. And then that's keeping out for a year. That's not timing. Okay. But this year has been phenomenal. Actually, one of the best picks of this year by me. So there we go. Buy, say all the analysts, and the momentum's good. Don't forget, as I already mentioned, all of these, and I've got more coming, all of these already were on my value growth income filtered chart, filtered database, which, in case you don't know, looks like, let me share that screen with you. Looks like this, but across 10,000 stocks. So it'd already been filtered, and that's why so many of my clients are sacking their IFAs and coming to me instead so they can get the data and do it themselves. Cisco fell off and now is starting to resume upward, so we're going to wait and see. With that one, Netflix, I don't own, but I'm showing because it's very popular, and that's what we're looking at. It's pulled back a little bit, but that's the angle we're looking at for that one. Have a look at my campaign for $1 million. If you want to sack your IFA and do this yourself, then have a look at my Great Investments program. Go to alpeshpatel.com/links. Thank you all very much for listening to that, and I look forward to seeing you on the socials. Please like, follow, share, give me a hug. Okay, depending on how many of you give me a hug, I'll know how many stayed to the end. Thank you.